NVIDIA's full stack ecosystem keeps it something that's very indispensable to people who want to hyperscale their operations. And a lot of companies are looking into that because remember, everything in life is competition. And people don't realize, if you realize this, things start to make a lot more sense in entrepreneurship and trading and your work life and your home life. Everything is competition. And I'm not saying that's bad. It's just, that's just the way it is. Like if I'm selling, if I'm at like I have a corner stand downtown and I'm selling hot dogs. I look around, there's no more hot dog salesmen. I say, well, I ain't got no competition. Yeah, you do. Your competition is not the hot dog vendors. It's the person down the street selling hamburgers. It's the person across the street selling coffee. It's the person down the street selling cotton candy. And people don't realize that. That's not my competition. Yeah, it is because you're competing for dollars. If somebody walking down the street with $5, they can only buy your hot dog and that hamburger. That's your competition. They got to decide between the hot dog and the hamburger. Now, how do you make your hot dog more appealing for people to buy? Well, maybe you get a better stand. Maybe you get a better sign. Maybe you get a dancing clown in front of it. I don't know. But you have to draw attention to it. It's competition. Now, even with AI, one company has chips built up and they're running AI systems. Now they're doing things at this speed, at one-time speed. Another company says, well, we're going to buy Blackwell Ultra chips. We're going to do it at 70 times the speed of you. We're going to do 70 times the amount of work you can do. Now they're getting all the customers because they say, look, we're going to do 70 times as much work. We're going to do it at a price because now that we have these chips, we can charge you less because we could do 70 times more work. Now it may charge you $1,000 to do a task on this one-time company, and it may be $10 or $100 to do it on this other company. You're going to choose the company that's cheaper and faster. Then this other company who was 1 times as fast has to scale up. So they're forced to buy Blackwell Ultra chips as well. So that's how competition works. So I believe that a lot of companies are going to start buying these chips, and that's what's going to cause NVIDIA's next phase of growth. And we're going to go, like I always said, NVIDIA can steal more than likely over the next 5 years, get to $1,000 from here. That's what is that, a 10 times? Where's NVIDIA? That's almost a 10 times return. Another 10 times return in 5 years. And I strongly believe that. There's going to be some ups and downs along the way. It's a rare dip, but history favors the bold. Remember that. NVIDIA just formed a death cross. Now, what is a death cross? A death cross is a technical signal. It's a bearish signal, but it shouldn't bother long-term investors. Now, the last time NVIDIA had a death cross in 2018 and 2022, NVIDIA rallied 140% and 85% respectively. So within 2 years. Now, a death cross happens when a stock's 50-day moving average falls below its 200-day moving average. Now, what do these two things mean? Now, a moving average is a measure of, it takes the stock's closing price over 200 days. It averages that price and it plots it on a chart. It does the same thing for the 50-day. But the 50-day is a shorter time frame. So because it's a shorter time frame, that shows the short-term demand for this stock. Short-term demand. The 200-day shows the long-term demand for the stock. So if the 50-day falls below the 200-day, that's a signal that the short-term demand has dropped in comparison to the long-term demand. So that's a death cross. That means that the long-term demand is going to follow quickly after. So if both of those start falling down, you got a downward trend. So it's a prediction pattern of a downward trend coming or demand dropping in a particular stock. That's why that death cross makes a lot of sense. And that's why people will see that as a signal that something bad is about to happen. So that's why they call it the death cross. It doesn't mean it always happens. Sometimes it's a signal for a bearish movement in stocks and crypto. But in this particular case, I think it's an opportunity to buy NVIDIA at these reduced prices. Now, NVIDIA is right now is just 25 times forward earnings. It was 50 times forward earnings this year. Remember, NVIDIA, the way we judge a stock is we look at earnings, right? And we say, well, how much, if I buy this stock, what is the cost to buy this company's earnings? And that's where we get the P&E ratio from. Now, NVIDIA at one point was 50 times earnings. That means that it would cost, the price of the stock in relation to the earnings was 50 times. So now it's half that at 25 because the stock has dropped, but the earnings have went up. So that's still a positive sign. That's a great sign going forward. Now, I don't believe that the stock price reflects where NVIDIA is going in the future. It's actually a great price right now. Like I said, there's short-term fears, but there's also long-term fortune. NVIDIA is still the #1 AI chip leader. The demand is growing faster than rivals can compete. The numbers are strong. The earnings are strong. The demand is strong, but the price is falling. That's another conflict that we could take advantage of. Now, XRP is held on. That shows you that it's not a dead coin. That's what we call success bias. People don't realize all the failures and all these things happening because they only focus on the ones that are successful. So they see something like XRP and they say, well, these other coins are more successful than them, so XRP is a failure. But that's not true, because of the 3 or 4 you could say did better than XRP over the last 6 months, there's at least 10,000 coins that failed completely. Maybe even 20, 30,000 coins that just failed completely. But people don't see that because of success bias. They only see the ones that the visibility is on the ones who did well. So you don't even see the other 20,000 that did bad. So you compare with only successful people.